business owners likely will have only one shot to sell a business. Most don't understand what drives value and how buyers look at a business. Until now. Welcome to the How to Sell a Business podcast, where every week we talk to the subject matter experts, advisors, and those around the deal table about how to sell at maximum value. Every business will go to sell one day. It's only a matter of when. We're glad you're here. The podcast starts now.
Welcome to another episode of the How to Sell a Business podcast, where I interview buyers, sellers, and professional advisors on what creates value and how to sell at maximum value. So I'm your host, Ed Mysogland. For the last 31 years, I have been helping people sell businesses, value businesses, and prepare businesses for sale. And so on today's episode, I'm venturing out into the online world, and I had the opportunity to interview Mushfiq Sarker of the website Flip. And if anybody's in the e-com space, you've undoubtedly heard about this guy. This guy is a legend, and he's not only a consultant, helping people do due diligence on acquisitions, but he's also an investor. That's where he started 15 years ago, where he started rolling up e-commerce and online businesses and newsletters. And to date, I think he just told me he had over 220 acquisitions. And so he clearly can identify what creates value. And he shares an awful lot of those tips and tricks and how to mitigate risk when buying websites and other related businesses in this new online world we have. So through his website, the website Flip, he's helped countless entrepreneurs and investors buy and sell businesses. And so I hope you'll enjoy. And you know what? I shouldn't say I hope. I'm certain you will enjoy my conversation with Mushfiq Sarker of the website Flip. Mushfiq, welcome to the show. I'm glad to have you.
Thanks, Ed. Glad to be here.
Well, so before you came on, I was talking a lot about how I found you. And to be honest with you, I'm almost a little embarrassed by the amount of content that you share, and I'm putting you on a podcast, and I'll make sure that we have all that link in the show notes to get on your newsletter list, because truly, man, you are just cranking information out, and I'm hoping that we can kind of fill in some spaces that perhaps you don't already cover in the newsletter. So let's tell me about the website Flip. How did you get the website Flip?
Yeah, just maybe a little quick backstory. 2008 is when I entered this world. I was 18 years old, or 17 years old, 18 years old. And nice. Just trying to make money on the side, and got into the idea of building websites, whatever that may be. There's different types of websites, and we could talk about that. But I sold my first business website when I was 20, so 2 years later. And that was to a pretty big company. And I realized that, hey, I can build these things up, grow them, and essentially bring traffic to these, which is very valuable to whoever you're selling to, and then flip them. So that's when I got into the idea of website flipping, right? Yeah. And since then, I've been only buying assets. So I buy them, I use my technical expertise to grow them, and then sell them. So fast forward 14 years now, that's what I've been doing.
And you were north of 200 flips, right?
Yeah.
How many are you at now?
I think probably 220 now. I lost count.
Good for you. So my first question is a selfish question that, when you have a domain, there's all kinds of people that are sitting on domains just trying, and they never do anything with it. Yeah. Is it better to say, screw it, let's spin up a website, or is it better to segregate the two and say, all right, I'm going to sell the domain and call it a day?
Yeah. So in the world that I'm in, we are sort of domain investors with a purpose. Okay. So the purpose here is that we're trying to make money from the domains rather than having them sit there. Now, to answer your question clearly, there's two types of domains I categorize. One is high value domains, 1 word, 2 word domains, English dictionary domains that are just so high value, 4 figures, 5 figures, 6 figures. You should not touch those. Those are assets. Keep those as is, unless you can build something like, $50 million value or something like that. Those are different. Yeah, go ahead.
No, and I'll just tell you. So I'm an investor in a couple of businesses, but one of the ones that I kind of wanted to roll out was one, the domain businessinvestor.com, where, you have people that need capital and then people that want to deploy capital and marry them together on a marketplace. Yeah. And so, it rarely does a month go by that somebody doesn't hit me up to buy the domain. That's the kind of thing I'm talking about. And I'm certain there's other people like me that are sitting there going, all right, what do you do? Is it better to sit on it and treat it as an asset? Like I'm an appraiser, I know the value of businesses, but boy, the value of domains and websites are entirely different. Yeah. So how does one determine what's the best strategic option for them? You know what I mean?
Yeah. Look, I'm not a domain appraiser. I do valuations for websites and online businesses, so I can talk to them on that front. But just to wrap up the previous thought, if you have 1 word domains like businessinvestor.com, I would say it's a 4-figure to low 5-figure domain, nothing more than that, less than 20,000. Sure. And, if you have a good idea on it, that's worth the risk. And I think your idea is good. You can do that. But if you own investor.com or business.com, I don't think you can build something with bootstrap with your own funds that can beat, really live up to that domain's expectations. So for that, you can flip that for 6 figures, multiple hundreds of thousands easily, right? So that's the distinction I want to make here. And then to talk about your point here, domain appraising is very hard because there is no revenue attached to it. So it's all about what is the comparable value. It's more like real estate. And then also what a seller is willing to pay. And a lot of people that are domain investors, when they see a startup, a VC funded startup come to them, the price goes up, right? So it's hard. It's hard to do that. But online business is much easier. Yeah.
Well, but is there, because you just alluded to it, and I'm curious, as far as market comparables, in privately held businesses, we don't have a whole lot of market data. We do there's 2 or 3 different clearinghouses that it's, voluntarily, people like me contribute to them. But where does one find comparable data?
Yeah, good question. So NameBio, NameBio.com they collect a lot of that auction data. So people list their domains on GoDaddy auctions or various auction platforms, Sedo.com, Dynadot, these different auction platforms. And NameBio is essentially the data aggregator. Okay. So you can search a keyword there, see what similar domains. So for example, the way I would value businessinvestor.com is look at variations. What did businessinvestors.com, if it's listed for sale right now, or if it was sold in the past, what was that? Or other variations of that, businessinvest.com. And then, come to an average and mark it up by a little percentage and call it good, right? And that's it. There's no secret sauce.
No, I'll tell you, but no, that's really helpful. Not only to me, but everybody else. That the variations of the domain itself and doing the analysis of the value, or the potential traffic, that are on both sides and coming up with an average. That totally makes sense. Yeah. When you I guess when you're looking at websites, and and selfishly, and this is how I got you on the podcast, because, we see a lot of businesses that I think are going to be sold for the parts. I really believe that we're going to see more and more of this, where really the only value is, the intellectual property and some of these intangible assets like websites. Yeah. So the tough part is, and I know it's a loaded question, but if I'm a business owner, how do I know that the website even has value to take that next step? You know what I mean?
Yeah, good question. So first of all, actually, I've been looking into it. BizBuySell has a lot of businesses, right? So sure. I'm in Illinois region, and I've been looking at these for mostly, obviously, a revenue multiple, but really just the website asset. And hence, this is the reason you reached out to me, and I'm interested in this. Mm-hmm. So, for example, in my city, there was a diamond jewelry business that went belly up. They shut down the physical location, and they're selling the assets for $60,000. Now, that includes the website and the 20-year customer list and email list, right? Now, how I value that, honestly, is just based on the domain, which is a very long domain. It's like it has the word diamond something in it.com. So the domain itself has no value. It's the SEO value that domain has. So you can use tools like ahrefs.com, semrush.com. These are third-party services. Plug in the domain and see what the domain rating is, which is called DR for short. And that gives you an indication of how powerful that domain is. It's a third-party metric. It's not a Google metric, but you can use that to gauge value. So anything above a 20, 30 is better than nothing. And there's more to it. I don't want to get into the details.
No, of course.
SEO realm. And then customer lists and all of that. An email list has very minimal value if it's not kept up to date, as in they're not continuously emailed at least once or twice a month. So if it was continuously emailed, like my website, flip.com newsletter 3 times a week, it's very hot, right? People open it, 50% open rates sometimes. And so if I'm selling that, I would get premium for that. But if I'm buying that diamond customer list, yes, there could be people there that are very valuable. But if they see my email, all of a sudden after 1 year, they're going to put me to spam in their Gmail inbox. And I just lost a lot of value there. So I would put 20 cents on the dollar, essentially. Whatever email list or whatever the customer is asking, just pay 20% of that or even lower value of that email list.
But when you were talking about SEO, I thought the SEO, and again, I am not an SEO guy. I pay people to do this kind of thing. Yeah. So, but the SEO, I thought went with the web, that it was embedded in the website, not necessarily. Yeah. Oh, so I am right. And
it's embedded with the domain.
Oh, okay.
Not the website. You can put anything on the website.
I got it. So SEO is tied to the domain. I get it.
.com, .net, .org.
Right. Okay. Yeah. And so, okay. So then when we look at the, I guess the newsletter is kind of where I'm heading with this. So when you were looking at the diamond business, So you were going to then take it and you were going to take the domain, lop it on top of another website, or you were going to spin up a website and basically do all the things that they should have been doing.
I'll tell you what I would have done. The person hasn't responded to me, so this deal is dead. But what I would have done is spin up my own e-commerce business on top of that, under using Shopify or these kind of different platforms, and be a reseller for diamonds, right? Or be an affiliate for a diamond business. Because I have a customer list, I have a very old 20-year-old domain, I could rank for a lot of the keywords that are very, very valuable and essentially drive traffic. So that would have been the game plan.
I got it. And so, but the newsletter was just an add-on, and if you got something, I get it. Okay.
Yeah. So the differentiate here is a newsletter is something of information sharing on a continuous basis. Here it will be just an email list, essentially, which is you launch some new products, you email them and say, hey, there's a 20% discount. Most typical e-commerce are not running newsletters. They're running email list essentially for sales and discounts and new offerings.
Yeah, I get it. What, so there's different types of websites, right? So you got e-com, you've got FBA, you've got all these kind of different websites. How do they stack up from a value standpoint? You know what I'm saying? Like we were selling an IT business, and at the very bottom of the totem pole is network work, and custom programming is at the top because that's the premium. So what's the hierarchy of value for websites?
Yeah, so there's a few. So SaaS is one, Amazon FBA businesses, content websites, e-commerce websites. So the best multiple you're going to get is for SaaS. They go about 5 to 8x, sometimes even more. Annual earnings, annual profits. Yeah. Content sites are in the 3 to 4x today. Amazon FBA is a little bit lower, 2.5 to 3.5, and e-commerce in the same range, 2.5 to 3.5x.
Do you think that the values are going to go up, or are they going to stay the same or go down?
So, I'm biased, but I'll give you some data. So, COVID hit and everybody thought that online business world is going to take a hit, because, as in just in general, multiples were going to go down, but they actually doubled. So I used to buy content sites for 2x. And now I am having to look at 3.5 to 4.5x in a span of just 1.5 years, 2 years, not that long. So are they going to keep going up? I can't say, but that's been the trend over the last 2 years.
So how, in making deals, it's all about risk, and certainly the empirical evidence that you have in evaluating the opportunities. I know you're quantifying your risk, but how are you doing the deal structure that it facilitates, that it incorporates it? Because like on a smaller bit, on smaller bricks and mortar businesses, you bump into due diligence where, there's all kinds of, potentially hidden things that, not necessarily, misdirection or malfeasance by the seller. It's just, it's a small business. But with websites and such, you can pull your Google Analytics and it's hard to hide that data. But there's still risk associated with it. So I'm curious to know, how do you diversify the risk when you're buying an asset like this? Yeah,
good question. So, earnouts and all of that, I'll get into that real quickly, but anything sub $100,000 value, and there's a lot of deals under that number, it's all cash. There is no way a seller is going to offer any kind of, risk management or earnouts or whatever, revenue share, whatever that may be. So it's all cash. You do your due diligence up front. 300K-ish area, that's when you can start offering some sort of earnouts. Usually it's about 60-80% cash and the rest paid out over time to minimize the risk. Does that answer your question?
Yeah, it does, but there's not like regular conventional financing or is there, so you're pooling your money, or do you have your own investment team that gets involved? Because 200 businesses, that's a lot of working capital.
So I should say, I started when I was a kid, right? So most of the businesses were 4 figures, less than 20K, bought, grown, and then sold for 50K, some smaller flips.
I got it.
So no, I don't raise money. I use my own funds.
Good for you.
Line of credits, whatever, is all my assets. So in my world of content sites, there is no easy funding mechanism. There SBA and all of that is very rare in the 100K sub range. 300 to $1 million, you can do that. But the thing is, it's such a liquid market for content sites. Nobody is going to wait. Seller's perspective. It's a seller's market right now. Waiting 3 months or 6 to 10 weeks, I think, is the SBA time range.
Yeah, a lot can happen. Yeah, a lot. No, you're right. A lot can happen. So, are what's the avatar of the seller? I mean, are they're, I'm 50, the people like we're serving are older. I'm just curious. I gotta imagine that the people you're dealing with are your age and below, aren't they?
Yeah. So I'm 33. So yeah, mostly in this kind of people who grew up with the internet kind of, booming, maybe late 2000s. So yeah, most of them are in that range. Now, yeah, there are people who have legacy businesses. That's the ones I look for, which is the diamond, those kind of ideas where maybe they started doing some content, some e-commerce, but they just don't know what they're doing. Now, those are assets. Those are very valuable to me. So baby boomers, those guys are getting rid of these websites, and I can get them cents on the dollar. But yeah, if you're buying from me, you're going to buy from somebody young. And there's two types of sellers. One is built to sell. So they're building these businesses to be flipped and sold.
Sure. Yeah.
Plenty of those in the sub 300K range. And then you occasionally, 1 out of 50 deals that I look at is somebody who really is an expert in that business, whatever the topic may be. And they're just selling for the sake that they're bored or they need to move on. Those are the ones I really strongly look for and pay crazy multiples for, because they'll stick around.
Yeah, I get you. So is there consolidation in you have let's say an authority, the Diamond Authority. All right, so you've got a content site that is all centered around diamonds, and they're considered the authority. Are you seeing any of them going around and picking up I guess it's buying traffic, isn't it? It's cheaper than feeding Google, huh?
Yep. Oh, plenty of it. Examples are in virtual private network VPNs. So
really?
You have the big companies like NordVPN. Everybody's used a VPN at some point.
Yeah.
Those guys are ruthless. They buy up any content site because they have a high customer lifetime value. And they can pay us the typical multiples of 3 to 4x. But to them, they can recoup that in 1x, right? 1 year.
Right.
Plenty of big players buying up smaller content sites. And that's what's driving up the multiples. Advertising has gotten expensive. Google ads, Facebook ads, and all these different ad networks where they could have received customers for much cheaper. And now they're realizing the return on investment on ads is much lower than just buying up, somebody like me who built up a site who has all the eyeballs now. Yeah.
So when I look at different types of businesses or different buyers, you've got your individuals that are looking at basically investors are buying themselves jobs. You have strategic buyers, and then you have private equity groups.
Yeah.
I mean, are you seeing much from private equity groups tinkering in your world? Really?
Yes. Starting just maybe the last 6 months, honestly. There's about 3 or 4 players now. They raised 30 million each. And they're building up a portfolio of sites, and they're buying from people like me. So yes, that's happened. It's happened much more in the Amazon space through companies like Thrasio, Thrasio. They raised billions and have bought all the mom and pop Amazon brands. And so that's now happening in the content space.
But I thought Amazon has such, there's so much risk associated with it. It would seem that private equity would steer totally clear because they can't quantify the risk of, Amazon saying, we're not going to do it this way anymore. What I mean?
High risk. And, if you look at the Thrasio history and just what they've gone through for the last 1.5 years, they've gotten hit big time.
I was going to say, to me, it's like the private equity groups that I know, they're like, if I can't predict what's going to happen with that business, there's not a way in the world I'm touching it.
Yeah.
So if you look in your crystal ball, I mean, what does this world look like in 3 to 5 years? Because I mean, I see it a little bit different because I'm seeing the the 70-year-old people that are looking at selling, and you young whippersnappers, they totally disregard, someone that, hey, I want to buy your website. I've had that conversation. I'm like, I'm not really certain you understand just everything in your business has a value, including that thing that has .com behind it. So right. What's the crystal ball?
Yeah, that's a good question. It's hard because, I'm younger, so I am our online world has kind of tightened up. As I said, advertising costs are higher. My world relies a lot on Google, organic traffic, right? That has also tightened up. So from my perspective, I am looking to go a little more local, as in online world will always be there, but it'll be supported a little bit from a local perspective as well. So there might be more e-commerce and products that I can sell locally in my city, but also online. So a hybrid approach. That's what I'm doing. Now, from the perspective of somebody in the, brick and mortar, right? They better get online because they're going to lose a lot of shit. I mean, I don't buy anything local anymore. Honestly, like I don't go to a store. I don't think a lot of people who grew up in the 2090s, they don't really go to the store. Amazon just delivers everything, right? So
that's right.
Yeah. So it's hard. I don't know. I don't have advice for the 50-year-olds unless they're willing to go, and figure out the online world or partner with somebody like me.
And that was kind of where I was heading with it was that, it seems as though, that the transition out of ownership, that is a really an interesting avenue to consider with, here's a guy that's going to take, an underperforming asset and do something with it. And then collectively your business is worth more. And so long as your health is in good shape and you don't need to, have a liquidity event, you should be in pretty good shape to at least consider that. Yeah. So one of the things that I know we got a little bit of time left, but I did want to ask you about marketplaces. It seems as though everybody's spinning up a marketplace, whether it's a job board or, marketplaces like, the Biz Buy Sells, the micro acquirers, things like that. I mean, is that the wave of the future? No.
There's a lot of demand for deals, right? Always will be, specifically in the online world. There's few big players in the online space: EmpireFlippers.com, Quiet Light Brokerage, FE International, Flippa, Micro Acquire, now Acquire.com is more for software and e-commerce businesses. There's a lot of little ones, right? Honestly, they're just going to go away, and these big 5 or 10 players are just going to remain. That's all.
So what are what's the big? Is there a deficiency in a marketplace? I mean, and where I'm heading with this is that is it right for a marketplace to niche down, or is it like, hey, this is the marketplace? Like Amazon has everything you could possibly need. Biz Buy Sell, I know they're tinkering with some online work. I know, I don't know if Micro Acquires or Acquire is going to, tinker in their sandbox. You know what I'm saying? That's where I'm headed with it is, how does the market play, again, 5 years from now, what does the marketplace look like?
Yeah, it's going to be niche. I think it has to be niche. So there's a lot of niche brokers. There's Amazon FBA broker that only do that. There's only e-commerce broker. And it's a group of people, right? A few people that really, really understand that topic and has a buyer list and a seller list and essentially can connect the dots. Go ahead.
But do you need a broker? You don't need I mean, are you using
I'm not using brokers. I get direct deals.
Yeah. So, okay. So you're doing your own lead gen, but people in this space don't necessarily, utilize an intermediary to find your deals, right? Or no?
Yes and no. So in the content space, it's much easier to do due diligence. There are some issues that some buyers should know about. So I don't think you need a broker, because a broker represents the seller. If you're a buyer, you need a buyer side representative. So I have an agency. I offer due diligence service. It's a one-time fee. We do the full analysis, right? So you need somebody like that, right, to just do a due diligence review, because if you're coming from the traditional business world, maybe most of your audience is, you have no idea about like what's involved in a content site.
100%.
There's a lot. There's more moving pieces. I'll tell you this. If buying like a franchise or a restaurant is honestly much simpler.
You think?
I think, and let me explain. Yeah. Maybe there's hidden things, obviously, but
sure.
If you have a broker on the seller side, they're going to kind of get you a CIM and get you a lot of the details. Yes, you have to look through employee contracts, all of that for sure. But when you go and look at an online business, not only do you have a team of people there as contractors or employees that you need to review as well, but you need to review a lot more, like the SEO traffic, wholesale relationships. And I'm talking about mostly product-based businesses. Is the website healthy? Are the cost of goods good? There's a lot more moving pieces, which on a franchise business, or maybe there really isn't. It's a little simpler. So the buyer side needs a representative, a due diligence. Don't trust the brokers to give you all the info. No. It's not in their best interest. They will, but take it with a grain of salt.
Sure.
So do you need a broker in the middle? For e-commerce, software, and Amazon businesses, you definitely need some sort of analysis. If you're an expert, that's good, but I'm expecting nobody here is an expert. So you need somebody. For content sites, for pure content sites, which is media businesses, it's easier. There's no products. There's no physical goods. It's all online. You need what's called an SEO analysis to figure out if that domain is healthy. And that's a part of due diligence as well. You also need a revenue analysis to ensure that the revenue streams the site is earning from is steady and is going to stay on for long term. So less due diligence, but still some due diligence.
Well, talk a little bit more about that service that you provide. So you provide the due diligence support service, and I'm assuming what you just talked about is all the services that you provide others. Yes. Yeah.
So we launched this about a year ago. Realized that due diligence. I've always been doing due diligence for people. We kind of really productized that and built a team around it. So I do the content due diligence. We have one person who has 5 years experience with Amazon FBA, another with 10-year experience on e-commerce. So whichever business the buyer is buying, we do a customized due diligence review. It's about a 20-page report, goes through everything, red flags, and also verdicts from our merger acquisition advisor. Like, if we were in your shoes, would we buy this or walk away? So all of that, all included, you'll have enough information to essentially close on the deal.
Okay. And from a seller's perspective and an appraiser's perspective, I mean, is it prudent to do that on the front end in order to give to the buyer? Or do you wait till you have the buyer and just anticipate the buyer is going to do the same kind of due diligence?
So in the online world, the brokers, so the big brokers, Empire Flippers, Quiet Light, FE International,
they're doing it,
etc. Right? They do due diligence.
I get it.
So they do due diligence. They put together these reports, collect the data, collect the revenue stream, take screenshots, all put it in a package for you, for the buyer.
I get it.
The only thing you are doing there as a buyer is you can take those and look at the numbers, look at the P&L, but they're not going to go above and beyond to analyze if that domain is safe.
Right.
So that's when you need a third-party analysis. So is it in the best interest for the seller side broker to get a due diligence report? Probably not, because I am very, very critical, right? Of 10 deals I look at, one of them I say it's good, and probably 2 of them I say there's warnings. Now, if you're a buyer, you look at that report and you see all these warnings, you're probably not even going to ask for any further information. So, it's weird, but that is what it is.
So the 9 that there are warnings, what happens to them? They just evaporate, or they just go to auction? What ultimately will happen?
Well, okay, let me break that down a little bit more. Brokers list them, right? Buyer hires me. I look at it and say, out of 10 deals I may look at, one of them full pass with best deal ever. 2 or 3 will have warnings, and the rest 5 to 6 are red flags. Go away, walk away, right? So the warnings one, most likely they can negotiate. Those are negotiable things, so we can reduce the price. The ones that are like red flag, walk away. My buyers mostly just walk away. Those deals sit on the marketplaces for a long period of time, until the contract with the broker side has, elapsed. Essentially, it's a 3-month time period. And then it's either those businesses are just going to die over time, and they're probably on a downtrend already, and the owner of the site business is just going to manage it until it's dead, or they go into an auction. Auction as in the next best place is flippa.com, which is an online business auction. They list and just get whatever pennies on the dollar they can and just walk away.
I get it. Well, like I said, I've always contended that, most businesses can sell. All right. And, but you have to understand, that, and where I'm heading with this is that, all right, you got 5 or 6 that have the red flags, and I'm just sitting here going, okay, well, how do you make those 5 or 6 saleable? Is it just purely a function of value, or is there something, if I'm you or I'm your buyer you're representing, how do I mitigate that risk to, say, all right, there's a big red flag, but you know what? I might be able to do something with this.
Yeah. So good question, right? On the domain side, SEO side of things, if the domain is spammed, which a lot of sellers do, and use bad approaches to build links or do things that are red flag, there's nothing a buyer can do to fix that without significant effort. It's not worth it. There might be another red flag where we've done a due diligence report recently where the business looks great, but for some reason their cost of goods for the physical product is just way too high because that individual is building them in their home manually, right?
Sure.
That is a red flag on the deal itself, to share with the seller. But on the back end, we're telling the buyer, look, if you can figure out the manufacturing in China or a factory in the US, that will come down. And that's an opportunity. Use that as a leverage point to negotiate. And then you can figure that out later. So that would be more of a yellow semi-red flag, depending on the buyer. So it depends again.
I get it. And that makes total sense that your red flags are a pass, but there's a caveat of, we might be able to do something with it, and here's how.
Yeah.
Okay. Couple more questions. So the social media that goes with, you have a domain, do you need the whole social media package? So, the handle for Twitter and Instagram and the Facebook page, you're buying all of that collectively, yes?
Yes. And you're buying everything. You're buying everything. Yeah.
So the domain really it is inclusive of that plus all of the social media that is pushing traffic to it. I get it.
Yes. Yep.
Okay. Do communities, and I say communities, Facebook groups and things like that, I'm assuming that adds value to.
Of course.
Okay. Well,
definitely. Definitely. Yeah. Adds more value. We just we're in closing on an e-commerce business, and there's a Facebook group with 8,000 customers.
Nice.
Right? How valuable is that? Right? I can ask questions. I can get feedback.
Right.
That's more valuable than an email list in some senses, right? Because you can post multiple times. With an email list, you have to be careful. If you keep emailing daily or multiple times a week, they're just going to unsubscribe, right? Yeah. But with a community, it's all about engagement. So you can post as many times as you want.
Yeah, I get you. No, that makes total sense. So when you when you see a website, like for example, I have a fractional interest, or I'm an investor in a marketplace, and our dev team is out of Ukraine. And they're scattered around the world. To me, looking objectively, I'm sitting here saying, you know what? That's big risk for me, because, seriously, they're across, it's one thing, you screw me over and I can just drive across the city and have a face-to-face conversation with you. Conversely, if it's on the other side of the world, I got to imagine that there is some inherent risk with my website. If I'm selling it to you, you're sitting there, I have to believe you're going, yeah, man, all your code, while you have possession of it, the people that are building it are elsewhere. Yeah or no?
No. There's much more safety mechanisms you can put in place with an online business: two-factor authentication, multiple logins, admin access, viewer access, which you cannot do with a physical store. Someone's got the key, right? No, that is not. My entire team, except for 2 people, are based in the Philippines, based in Eastern Europe, Croatia, Serbia. And I have not, in my 14 years, have any issues whatsoever.
Knock on wood. So I did want to at least give you the opportunity of what are you looking for? I mean, I'm certain, there's people that are going to be listening that, they're like, I never even considered something like this. So what kind of deals are you looking for, and what size, and how can they self-assess to determine whether they should reach out to you?
Yeah, good question. Look, if the thing we talked about, right? If there's somebody who has a business, they're shutting down, maybe they're retiring, they cannot find a buyer, and they have a website, reach out to me. I can give you an offer, at least if I like it, right? Worst case. It might not be a number you like, but it is a number, right? So that's for the websites, right? And then the second would be, I am in the market for e-commerce businesses, sub 300,000. So if anything, like that, for sure, send them my way. That's really all. So
it seems as though, you put out great content, and like I said, in when we were just getting started, I mean, it is remarkable how much you're cranking out, and truly it has been. I really enjoy reviewing what you send out. But one of the things I'm curious to know whether or not you people like you are we're going to see a lot more. Of a land grab, you know what I mean? I don't know who builds the better mousetrap, or who's the better buyer, or who has the better case study. I'm trying to look. I'm trying to see where the puck is going, and I gotta believe that there's people that are out farming in the same places you are. You know what I mean? And So I mean, how do you differentiate yourself?
I'm first to market. Right. I've been doing this so long. People have kind of, in my community, it's not that big, honestly, very small. Everybody knows me. And they've known me because I've been active. I just didn't have an online presence with a brand until 2020. So in 2020, I was first. I'm not really worried about competition, but yes, there was plenty of people that have followed, and there will be, right? And I'm sure with your podcast, plenty of people trying to launch a podcast as well, right? So it's just being quality and upfront and consistency. Consistency is so key. I have not missed a newsletter issue ever, even on holidays, like December time. You cannot miss. They expect it in their inbox, and they email me when they don't receive it. If it's 15 minutes late, I'm like, oh, where is it? Because sometimes I forget to schedule it. I write it up, and my team does it, and there's a schedule button, and I forget. And I wake up in the morning, and it's not in people's inbox. I'm like, oh, I forgot to schedule it, and I have to send it 15 minutes late, and I got emails in my inbox.
It's funny you say that, because I for my newsletter, and it's small. I mean, it's only got 3,500 people or so on it, and and I missed it. And some guy goes, "Are you okay?" And I'm like, what are you talking about?
Yeah.
And so, the good news is that people were reading it. So that's awesome. Well, my last question, and I ask this of every guest is, what's the one piece of advice, that you could give to our listeners that would have the greatest impact on their business?
Well, since we're talking about acquisitions, the one piece of advice I give on this content site space and e-commerce, it's very hard to it's very hard to buy something today with a little bit of money that's risk-free because of all the price increases that have happened across the board. So if you really want to enter this space, you should learn on your own. Build from scratch. Build something so that you know what you're looking for. The worst thing you can do is, somebody who's listening is go on these marketplaces where everything looks great. Every deal looks so good. I mean, even from my perspective with so much experience, every deal looks enticing. They're not, right? And you could buy, I have seen people, and it's very bad, buy something for $600,000 as an example, and it crashes the next month. Think about that. That's cash, right? Yeah. So don't do that. Build something from scratch. Engage in Facebook community. There's a lot of Facebook communities that are big for online business space. Join them. Read, learn. This is just like buying a brick and mortar business. It's just a little bit harder because it's a new age technologies, right? You're not really dealing with a lot of people. You're dealing with a lot of technology. So just build, learn before you go and spend all your hard-earned money.
Well, and join your newsletter. And I'm not just saying that just because you're coming on the podcast. I've shared your newsletter with a number of people because it really is a lot of great content. And I hope that you can point to the Facebook groups or some of the education that you're seeing, where to go. So
yeah.
Mushfiq, I'm so grateful for our time, man. It's been awesome. I can't tell you how much I've enjoyed it and how much I've learned. So thanks so much for being on.
Thanks, Ed. Thank you so much.
Thank you for joining us today on the How to Sell Your Business podcast. If you want more episodes packed with strategies to help sell your business for the maximum value, visit howtosellabusinesspodcast.com for tips and best practices to make your exit life-changing. Better yet, subscribe now so you never miss future episodes. This program is copyrighted by Myso Inc. All rights reserved.